All right, today we are diving into one of the biggest, boldest, and let's be honest, one of the riskiest corporate gambles of our time. It is the absolutely wild story of a software company that decided to bet its entire future on Bitcoin. So, the company we're talking about is MicroStrategy. And the size of their bet? Well, get ready for this. 650,000 Bitcoin. At its absolute peak, this stash was worth over $50 billion. Now, that might just sound like a big number, but let me put it this way to really let it sink in. This isn't just some big corporate investment. This is 3.1% of every single Bitcoin that will ever exist. One company owns a huge chunk of the entire pie. So this brings up some pretty obvious questions, right? Like, how in the world did they pull this off? And maybe more importantly, with the market turning against them, is this whole massive bet on the verge of a catastrophic collapse? That's what we're going to break down. Okay, so let's start with how they did it. Because for a while there, their strategy was so good, it looked less like a business plan and more like, well, like a video game cheat code. Some people were literally calling it an infinite money glitch. The core idea, led by their CEO, Michael Saylor, was actually pretty radical, but also simple. They decided, hey, we're not just a software company anymore. We're going to be a vehicle for holding Bitcoin. They'd use debt, they'd issue new company stock to raise cash, and then they'd pour every single dollar into buying more Bitcoin. And this created this incredible self-feeding loop, a flywheel, if you will. Here's how it worked. Investors were so hungry for Bitcoin that they'd buy MicroStrategy stock, ticker MSTR, for more than the value of the Bitcoin it held. Then MSTR would take that extra cash, buy more Bitcoin, and in a rising market, that would push their stock price even higher. That allowed them to just repeat the cycle over and over again. And just look at this. This chart shows you exactly how unbelievably well this strategy worked. We're talking about an initial investment of a couple $100 million, just exploding into a $56 billion treasure chest at its peak. The machine was, quite literally, printing money. But we all know what happens with flywheels, right? What goes up can come down. So what happens when that perfect machine grinds to a halt and starts spinning backwards? That's when the story takes a much darker turn. Okay, so this is the absolute key to the whole thing. The entire strategy, the whole magic trick, only worked because their stock traded at a premium. But now, that's flipped. The stock is actually trading at a discount. In other words, the market is saying the company is worth less than the Bitcoin it's holding. The magic is gone. And the fallout from that? It's been brutal. The stock price has just been hammered, down anywhere from 57 to almost 70% from its highs. Yeah, that flywheel that once lifted them to incredible heights, it's now the anchor dragging them down. And that brings us to the next kind of terrifying question, right? What happens when your money printing machine doesn't just stop, but it starts eating your money instead? Well, you find yourself in a very dangerous spot. And that brings us to today. Right now, MicroStrategy is basically performing a high wire act, trying to balance this mountain of debt against the crazy volatile price of Bitcoin. And when I say a mountain of debt, I am not kidding. Just look at this breakdown. We're talking a staggering $16 billion in total obligations between debt and preferred stock. That's the leverage in their leveraged bet, and man, is it a heavy weight to carry. And the problems, they just keep piling up. Their entire company's fate is basically lashed to the price of Bitcoin. Their credit rating is officially junk, which makes borrowing more money really hard and expensive. Plus, now there are Bitcoin ETFs, which give investors a way safer, cheaper option. And the cherry on top, their original software business is actually losing money. And if all that wasn't enough, there is a literal deadline looming. A ticking clock. January 15th, 2026. That's when the MSCI index is going to review them. And because they're basically a crypto treasury now, not a software company, they're at serious risk of getting kicked out of major stock indexes. Now, why does getting kicked out of an index matter? Well, listen to this. According to JP Morgan, that one event could trigger anywhere from $3 to $9 billion of forced selling, as all the index funds would be required to dump their shares at once. So let's be super clear. This isn't just about market sentiment. This is a technical, mechanical event that could kick off a complete catastrophe. All those index funds have to sell, which pushes the price down, which makes their situation look worse, which makes it harder to raise capital. You see where this is going. It's the definition of a death spiral. So all of this, the debt, the stock crash, this looming index exclusion, it all leads to the one question on everyone's mind. Could MicroStrategy actually go bankrupt? Now, hold on. A complete collapse isn't a sure thing, at least not right away. They were pretty smart about how they structured their debt. There are no margin calls, which is huge. It means they don't get automatically forced to sell their Bitcoin if the price dips. Most of their big payments aren't due for years, like 2028 or later. And they've got about a $1.5 billion cash cushion, giving them maybe a 2-year buffer. However, the path to insolvency is very plausible. Here's how it could happen. First, you need a really bad, really long Bitcoin bear market. Then, the value of their Bitcoin stash drops below what they owe in debt. After that, when they need to refinance, nobody wants to lend them money. At that point, they have no choice. They're forced to start selling their Bitcoin into a terrible market just to keep the lights on. And that's when the death spiral really kicks in. So really, it all boils down to these two possible futures. Best case, this is all just a temporary dip. Bitcoin is about to go on another massive rally, and Michael Saylor will look like an absolute undervalued genius. Worst case, it becomes a leveraged disaster, the ultimate cautionary tale of what happens when a company bets the entire farm on a single volatile asset. And that's really where things stand. This is either one of the greatest conviction plays in financial history, a bet that will pay off in a way we can barely imagine, or it's a high-wire act that's about to end in a fall we'll be talking about for decades to come. The story is far from over.